The David-Varady Intermediate Indicator is a technical analysis tool that seeks to detect price reversal levels by combining market momentum and volatility. Its calculation is based on two components: momentum, which measures the strength of the price movement, and stretch, which reflects the speed of change in volatility. By weighting these two factors, DVI identifies when price momentum is weakening or volatility is increasing, which could indicate an impending price reversal. In other words, this indicator is primarily used to identify potential price reversal points, allowing you to detect when a trend is weakening, identify potential entry and exit points, and confirm other technical analysis signals. We can find this indicator on TradingView by searching for the name David-Varady Intermediate Oscillator by user Ella Cobra. The DVI parameters allow you to customize its behavior and display to suit your trading style and the markets you analyze. Magnitude weight controls the importance of price momentum in the calculation. A high value means that the momentum will have a greater impact on the result. Stretch weight controls the importance of price volatility. A high value means that volatility will have a greater impact on the result. Magnitude lengths are the three moving averages used to calculate the price momentum components. The stretch length section controls the three averages used to calculate the price stretch. We can also choose whether we want the bars to be painted in the color of the trend. And finally, the timing of the indicator calculation. The DVI indicator is a useful tool to complement your technical analysis, but it should not be used as a buy or sell signal on its own. You can use it to identify the exact moment to send an order according to the expectation of your analysis. For example, if we identify that the price is at a strong support level, we expect a buy signal from the indicator to know the exact moment to send an order. On the other hand, if the price is in an overbought zone, we wait for the indicator to give us a sell signal to place a sell order. In this way, we can take better advantage of the indicator's signals. We can also combine it with other indicators to find a combination that suits your style. For example, we can combine it with the MACD indicator. If the DVI shows a reversal signal at the same time as the MACD crosses below its signal line, this could confirm a possible uptrend reversal. Or with the RSI indicator, if the DVI shows a reversal signal at the same time that the RSI is in an overbought or oversold zone, this could confirm a possible trend reversal. Or, perhaps, with Bollinger Bands, if the DVI shows a buy signal at the same time that the price is near the lower boundary of the Bollinger Bands, this could be a good opportunity to enter a long position. There are many possible combinations. The key is to find the combination of indicators that best suits your trading style and the markets you analyze. Experiment with different combinations and see how they work in different scenarios.